And welcome to the show. Subscribe at kevinmd.com/podcast. Today, we welcome David Mandell. He's an attorney and wealth manager. Today's Kevin MD article is Why Physicians Are Unlike the Average Investor, and it's an excerpt from his book, Wealth Strategies for Today's Physician, a multimedia playbook. David, welcome to the show.
Kevin, I'm really pleased to be here.
All right, so let's start by briefly sharing your story, and of course, we'll talk about your book and why you decided to write it.
Sure. So my story is quite physician focused. As you mentioned in the bio, I started my career 30 years ago as an attorney, mostly in estate planning and business planning, and then got really interested in a field called asset protection. And the reason I did, and what asset protection is about, is helping clients shield their wealth from potential future lawsuits. And the reason I got into that, my father was a radiologist. And while I was in law school and in business school, he became concerned about it. Said, listen, I'm reading so many films when they used to be films, and I know I'm going to miss something. I'm human, and I don't want to bank everything that I'm doing on that, all my savings and all that. So, started my career in that direction, wrote a book called The Doctor's Asset Protection Guide in 1996, so almost 30 years ago, and then continued that sort of focus on serving physicians when we formed a wealth management firm about 18 years ago. So I still maintain my law practice, really for old clients, don't really take on new clients there, and do most of my work at the wealth planning firm, clients all over the country, and really physician focused.
All right, so sometimes the intersection between personal finance and what physicians do is something that we always explore on this podcast because, as you know, physicians do not get a lot of personal finance training during medical school and residency. So you have an excerpt here, Why Physicians Are Unlike the Average Investor, and we'll talk about your book later on, of course. But this particular excerpt, for those who didn't get a chance to read it, what's it about?
So the concept here, and I have to credit my partners. We've got 7 partners, all equity holders in our wealth management firm. And we've got folks who, manage portfolios and do the financial planning, the CFPs and all that. And, I'm just a lawyer who knows my field. So, but the point of this article is to let physicians know, especially as they age and build up more wealth, right? I mean, I know there's a difference between a fellow and someone coming out and dealing with student loans and their first home purchase than someone who's 10, 20, 30 years in practice. We know it, okay? But as that happens, there's a lot of financial media. Like when I started my career in the 90s, there wasn't that much financial media. You would watch like Wall Street Week at the end of the week. That's it, right? Now we've got just so much hitting us. And for a lot of what's out there, as physicians, move through that wealth plan in their career, it's not relevant for them. So this article was to just remind docs that their income is higher than the average physician. Their tax issues are often more important than the average viewer or watcher of even what you would think of from higher end websites. And on the other side of that, Kevin, they don't have much time, right? You know this. So it's hard to dedicate the time and do everything on your own. We have a lot of clients who, we do a piece of it and they're do-it-yourselfers on the other piece, and I understand that. But when you combine having more income, overall having more wealth, having less time, and then the other concept in the article that we flesh out in the book is, highest and best use opportunity costs. So is it better for a physician to see other patients or do something entrepreneurially and then farm out doing their will or their tax return or their investments, et cetera, rather than try to do everything themselves, which I think leads to a lot of stress. So that's sort of the concept of the article at a high level.
So what would you say are some of the biggest mistakes or red flags or traps that physicians fall into financially?
There's so many, but I think that one might be is that I see often is finding an advisor early in their career, right? And again, my partner Jason Odell is worked like he used to do in the 90s at hospitals with the residents and fellows, sitting in the fellow room and bringing pizza and helping them with their first disability policy, their first investment, et cetera. And a lot of docs find an advisor that way early in their career, and they stick with them for good reasons, maybe out of loyalty, out of they think ain't broke, don't fix it. But their challenges become more complex. Like, oh, I'm going to be doing rental property. Should I own that in a real LLC or not? That advisor really isn't equipped to help them with that. Or their tax issues become a little more complex. Maybe they're doing some side hustles, and should I create an entity for that, or should it just be a 1099 on my tax return? And they're not really equipped to answer that. And so the point is, in medicine, your doc that you start with as a pediatrician, as a young person, is not the doc for the rest of your career. You have specialists.
Yeah.
And we know that in medicine. People are comfortable with it. Apply that also to wealth planning, and understand that your needs may change, and it's okay to change advisors or to find other expertise you may need.
So that decision point that physicians and their families make, whether to do it yourself or go with a company or advisor, tell me the types of questions physicians need to ask themselves to determine which path they should take.
That's awesome question. We actually have in the book a chapter just on that. We go through like 6 or 7 questions. I think the most important concept behind it is transparency. We have, there's a graph that shows it as transparency goes up, trust goes up. Mm-hmm. Most physicians, there's some do-it-yourselfers who are like, I don't want to work with anybody. Fee drag is real, which it is. You pay someone to do something, you're going to have less if you got the exact same return than if you did it yourself. But there's data out there that shows people who work with advisors typically do better. But putting that aside for a second, back to the questions, understanding the business model. Like, one of the things as a lawyer, people make lawyer jokes all the time. I start my lectures with a lawyer joke my dad loved, right? Mm-hmm. But what they liked about working with me was when I did work with them in estate planning, asset protection, it was a flat fee. So they could decide after a meeting, this is what Mandell is going to charge, this is what I'm going to get out of it. And I can decide to work with them or not, but it's not an hourly rate where there's some kind of unknown and maybe even conflict of interest of, I'm going to, work slower, which is good for me. I'm going to get paid more, not so good for the client, right? The financial piece, same thing. Understand how this advisor makes money, okay? And you should be very frank about that. How does the firm make money on top of that? Do they have proprietary products, et cetera? And then you can understand, okay, this is what's in it for them, and you can begin to build that trust, because if you don't know that, and I can't tell you how many really smart physicians, great schooling, great training, terrific doctors, they come to us and they go, here's my statements. I don't really know how much I'm paying.
Now, you talked earlier, of course, that physicians aren't like the average investor. They're at a higher income bracket. Now, for those physicians who are doing it themselves, tell us the type of unique obstacles or situations that they're confronted with.
Well, I'll give an example from this year, okay? Just on the investment side. I'm not even going to talk about asset protection or tax or all of that kind of thing. But let's just say on investment, because I think that's probably the area most physicians are focused on doing it themselves. Certainly, I run across doctors who will file their own tax return. They'll try to, maybe they'll use LegalZoom or one of these tools to create legal documents. But that's, I think, a smaller percentage than physicians say, listen, I'm really interested in the markets. I want to manage my money. So here's what happened this year already, right? In April, we saw a 2-day drop in the market of 10%. Yeah. Okay. The first thing we want to make sure if you're doing it yourself is you don't panic, right? And you don't go to cash, right? And we've trained our clients, a lot of them we've had since 08 and 18 and 22, et cetera. So they know that. When you're on your own, you can't run ideas by somebody, or you can't, confide in someone. You might be tempted to do that. Now, a lot of docs have been through this enough, they're not going to do that. But that's just avoiding a negative. What about actually a positive, meaning having the physician, before there's a downturn, because we know they'll happen, before there's a pullback, research in their portfolio, what are other options? What are other funds that could fit in that asset class? Because maybe when there's a big pullback, there's an opportunity to do some tax loss harvesting and sell some funds that have some losses in there, and then buy back in to a similar fund, perhaps in the same, let's say, international or large cap, small cap, whatever it is, when that pullback happens. And we did that for clients in April. We did that in March of 2020 during COVID. But that requires a fair amount of research before it happens, with sort of the dry powder ready to go. you can't just wait to those days because it's too quick, it's too much going on, et cetera. You have to sort of have that bullpen of funds you're ready with. That's the kind of thing that most docs who are doing it on their own don't do.
Mhm.
Not all. Some are really diligent and we'd love to hire them at our firm, but most don't do that. They sort of react, they don't do it proactively. And that's what it takes.
So you go to a lot of these physician finance sites and they recommend, of course, an index fund strategy, perhaps two or three index funds. Now, for the majority of physicians, a simple plan like that, is it enough?
We're big fans of index funds. I mean, in our portfolios at OJM Group, like large cap US, we just don't think there's anyone who's competing the S&P 500. So why pay for it? Let's make it as cheap as possible. In certain asset classes, maybe international, maybe developed international, maybe emerging markets, we think there is some value proven from different fund managers, and it's worth paying for that. Again, this gets back to business model, Kevin. We charge a assets under management fee, okay? Pretty standard in a lot of firms, but not all. So what that means is beyond our fee, we want our clients to do as well as possible because it means we do as well as possible. So we're not going to choose anything that's more expensive than it needs to be. So back to your question, yeah, we're big fans of index funds, but again, especially as physicians build their wealth, they should be looking at some private investments to hedge against the correlations because everything's correlated to the S&P, it seems this year. I mean, these days, especially the Magnificent Seven, right? So having some private investments, whether that's real estate or private debt or private credit or private equity, et cetera, hedge, not a huge piece of it, but enough to hedge the portfolio. And that's the kind of thing that you wouldn't just get by putting together some index funds because even a successful physician is only one client. We manage about $1 billion. So we're getting to see some opportunities where you might have some minimums. We can put 10, 20, 50 clients together, including me. They manage my money and get into something that really helps the portfolio that I wouldn't be able to do. So long-winded when say we're big believers in index funds, but we think that should be combined with some other stuff.
So let's talk a little bit about asset protection. I think the biggest fear that physicians have is the proverbial story where they may get sued in some type of malpractice lawsuit for an amount larger than their insurance would cover, and it affects their personal assets. So how realistic is that common fear that physicians have?
Yeah, I mean, this is why I got into the field because my dad was concerned about it. My brother, who's a cardiologist, he started to practice in Florida with no malpractice insurance. He joined somebody. So he was like the first day coming out of fellowship, Dave, what can I do to protect myself? So it is not very likely that that's going to happen. I mean, I do not push the panic button. I can't give you the exact number or percentage. There are claims that go beyond coverage limits. Okay, they happen. Okay, we know, I've written about this. There's been some, famous cases. An orthopedic surgeon took care of the Philadelphia Eagle who got sued successfully for $40 million, et cetera, et cetera. But it doesn't happen all that often. Now, there are other types of claims too. We've had clients who have gotten in trouble for HIPAA violations, for things that don't have to do with treating of patients, wrongful termination of an employee, all the kind of things we deal with if we own our own practice that we have to think about. My brother was more concerned about teenage drivers driving around South Florida than he was about his patients. But what I tell clients is this. When it comes to asset protection planning, whether it's legal tools or insurance or exempt assets, we don't need, everything should be cost benefit. Mm-hmm. So let's not go overboard. Clients, some docs come to me, Kevin, and they've gone to some back of the room seminar and they say, I paid $10,000 for this book of trust. I don't even know how it works, et cetera. And I feel bad. I'm like, listen, that's not really what you need. You don't need to spend that much. It could be just a couple of adjustments. It really depends on your state, very state specific. But I'm always telling clients cost benefit. Let's look at the assets. What can we do to protect them better? That doesn't cost a lot. That's not disruptive. You don't have to give away assets to irrevocable trust. Let's make it reasonable so you can sleep better at night, but not interrupt your planning. So I think big picture, it's just like a patient coming to you. There's some concern about this risk that's out there, but we don't want the medicine to be worse than the disease, right? And so it's all balanced.
You're, of course, the author of the book, Wealth Strategies for Today's Physician, a multimedia playbook. I'll make sure a link to that book is included in the show notes. So, taking a step back, what are some of the other key messages you want readers to come away with after reading your book?
Yeah. So I think, think of your wealth health like your physical health. And again, docs are always not so great about taking their own physical health. And I know you have a lot of articles on burnout and
Mhm.
all of that, and that's important. But the point is there's different specialties, right? In my firm, my background as a lawyer, I know asset protection extremely well. I've been doing this, writing books on this for 30 years. My partner, Carol, she's a CPA with 30 years of tax experience. I make the joke that she knows tax so well. She's got now 2 kids who are CPAs. We've got wealth managers, we've got, CFPs, insurance people, et cetera. That's the kind of approach you want to maximize and be efficient in your wealth time. It's really hard to go to just one advisor or even try to do it yourself because it's like the body. Cardiology is different than gastroenterology, et cetera. They relate to each other. And the best health, I think most docs would agree, is having those specialists and having them talk to each other, have it coordinated. That's why if I'm a CEO, and I go into, a major medical center, they're going to do all the testing and coordinate. That's what we've tried to replicate at OJM Group. We're not the only firm who does it, right? And you can even do it yourself by being the quarterback and having the CPA talk to the attorney and having the attorney talk to the insurance. And it's possible. We try to make it easier than that, but I think that's the main lesson. And the other, which obviously jives with your audience, is you are the CEO of your financial life. Mm-hmm. I mean, you are. You're the one who's ultimately going to benefit you and your family. And you're the one who's ultimately responsible for trying to get to those goals, whatever they are. My father was a radiologist. He passed away last year. He worked until 6 months before he passed away, 50 years in practice. My brother's a cardiologist. I don't know how long he's going to work, but every doc that we work with, either as a lawyer or a wealth management firm, has their own goals. We're just trying to help them get there. But you typically along the way, just like with health, you may need to see the orthopedic surgeon. I've got something for my elbow here. You may need to see the cardiologist. You may need to see the gastro and get the colonoscopy. Wealth planning is like that. You probably need different areas along the way. So either try to put together that team yourself, or obviously we're here to help if
And I just want to reiterate the point that you mentioned earlier. And sometimes, as a physician's salary and assets grow, their financial needs are also going to grow as well. So, the financial advisor that they may have met during residency or fellowship, or if they were to do it themselves at the beginning, eventually that may not be enough for the assets that they're eventually going to have.
That's right. I mean, I can think of a client, actually lives in South Florida down by me. Our clients are all over the country from Hawaii, Alaska, everywhere. But this one just happened to be down. And he managed his assets, his own. He was like his own wealth manager. And he said, listen, I'm 62. The numbers are bigger now. I'm close enough to retirement. Those football fans, retirement red zone, like it's there, not there yet. And my wife and I want to make that point, are concerned that I need some help. Like I shouldn't just be doing it on my own. I got a full practice as a surgeon. I got kids. Things are running around. I might have grandkids soon, et cetera. And that's my other point is not only is it the physician, again, we have lots of 2 physician spouse clients, right? But it's also, if you're married, the spouse too, you both have to get on the same page. And oftentimes one may feel comfortable that they're doing it themselves and the other may not be so much. And that becomes some strife. So the other point I'll make is it's not 0 to 100. I mentioned this before, meaning that we have clients who say, yeah, I really love doing some of the investments. So fine, you do a piece of it, continue. Do whatever it is, crypto trading, watch the markets, et cetera. Let us be your quarterback and look at everything and bring those other ideas to the table so you're getting where you want to and you can still do the piece that you want to as well. That's important for people.
We're talking to David Mandell, attorney and wealth manager, author of the book, Wealth Strategies for Today's Physician, a multimedia playbook. David, let's end with some take-home messages that you want to leave with the Kevin MD audience.
So, I think spend some time, and I think this is sort of self-selecting. People who are on your site, people who are listening or watching to us, care about their career, care about their personal well-being, care about their financial well-being. So keep doing that. Keep being on Kevin MD, get educated, get a copy of our book, You can get it for free, right? You can see it there. It'll be in the show notes because you're responsible for that. And if you get educated, you can ask the questions of your present financial planner and make sure it makes sense, of the ones you might interview, et cetera, and learn from your colleagues. One thing about this book, it's multimedia. So throughout it, there are links if you get the PDF or QR codes if you get the hard copy to podcast interviews that I do, because I have a podcast with other physicians. So they're talking about, hey, this is how I protected assets in the past. This is what works. This is what hasn't. This is the tax mistake I made. This is what I should have done when I took my first job, et cetera. So learning from colleagues is also crucial, and we try to give a little piece of that.
David, thank you so much for sharing your perspective and insight, and thanks again for coming on the show.
Happy to be here. Thanks for having me.